Hello everyone, Tony Laporta here. This is a rare evening webcast, but I am going to put the link in my commentary because I just figure it's easier to explain what I saw. And what I saw and what I've seen for the past 3 weeks, shall we say, is the bond market is driving the bus. In other words, as the bond market, collapsed lower, the stock market went with it, and then last week the bond market firmed up and the stock market firmed up along with it. Today the bond market comes off and the stock market goes down with it. This is where the things change a little bit. I think, and hold on, and I'll check the lows of the move in the lows of the move in the bond market came at lunchtime, between 12:15 and 12:25. That's Eastern time. And at that time, I'm scrolling back, sorry, but at that time, the S&Ps, 12:15 and 12:22. So the S&Ps were coming off in hard as well. The S&Ps topped out around 12:15, 12:14, and came off then for the next 10 to 12 minutes down to their initial lows down at 27.50, whatever, 8, 7. The point I'm trying to make is then the S&P started to bounce, and the bonds bounced a little bit, but the S&P's traded up a total of 17 handles from the lows, and then they started coming off again. And the point I'm trying to make is, while the S&Ps are coming off all afternoon, the bond market just kept on inching its way higher one tick at a time, to right at the end of the day, the bond market traded as high as 142, hold on, 142.25, with a low of 142.04. So the bond market has ticked up 21 ticks from its lows. Right now it's trading 22.3. The point I'm trying to make here is, the bond market, if the bond market's rallied 22 ticks from its lows, you would think the S&Ps would also go out well off their lows. And they didn't. They traded to new lows at the end of the day. They traded weak all afternoon. And that's kind of telling me that the bond market is giving us an early warning flag that it's not driving the bus anymore. It's actually going to catch some sort of little flight to quality bid. And maybe today was the early stages in this flight to quality bid. And if it is, there will be money to be made buying this bond market and or selling the stock market. So that's this whole, I throw in a bunch of technical indicators, of which I'll put in the commentary, outside reversals. There's, you never know where the market could open in the morning, but we could have a possible 2-day island top in the Dow futures. I mean, there's a lot of things to come to play. But what I'm trying to say is, in afternoon trade today, we saw the slightest flight to quality bid come into the bond market while the stock market was coming off. And it wasn't like the stock market was coming off hard, but it was just coming off. And I think that's a warning flag. And I think you could either, tomorrow, we'll see where the market's open in the morning, either be, I'm going to probably try to get short these S&Ps somewhere. They haven't opened yet on the reopen, but I'm going to try to get short somewhere. I think they went out around 47, 48. I'm going to either try to do that, but then tomorrow, keep an eye on the bond market. And if this bond market continues to firm up and the S&Ps don't want to rally with it, I think we could be in for a nasty little spill in the S&Ps. So that's all I have. This is Tony Laporta. This will go into the commentary, and we'll see what else we can do. Cheers.